Good afternoon. This is your midday market update. Well, stocks are up again, but there is a disconnect going on between the economic data that we're getting and how the stocks are reacting now. We did just get pending home sales, and they were up, and that has helped those home builder stocks. But we've also got a lot of other information that hasn't been as rosy, and I'm here with Mark Newton from Greywolf Equities. So we were just talking about the Dallas Fed number.
Right, it came in really at the lowest level ever on record on a monthly basis at minus 15, because of what's expected. And we continue to see weak economic data, but there is a real disconnect between how equities are moving and this economic data. We saw the weak GDP last week, weak durables number. I think right now we'll continue to see stabilization based on what's happening in Europe and the fact that yields are hitting record lows. The new Italian government now is now in place. So we, in general, are seeing real signs of strength that has not been apparent over the last couple of years. Each time in the spring last year and the year before, we saw economic weakness. Now we see a euro that's rallying against the dollar. We see yields hitting new lows. So that's certainly much different. Does that mean that equities are out of the woods? I think right now things are really overbought and they are somewhat vulnerable. But for right now, you can't fight the tape, and prices continue to hit new highs. You have to be long for traders looking for levels. 1571 in the S&P futures, 1578 I think on the S&P cash. But until we see any signs of deterioration, all these negative technicals with regards to momentum hitting new lows, which is certainly a big deal. The ongoing rise in the defensives, which have led this market the entire year. Those are all concerns, but yet price right now doesn't matter. And now we're starting to see signs of the U.S. indices hitting mid-April highs, with the NASDAQ composite hitting new highs for the first time, and also the NASDAQ 100, which is approaching those highs. So the big cap tech is now starting to surge again, which had been lagging during this whole move. So that's certainly interesting.
So you're right. So it starts to become this age-old question. Are we going to get to that point where we hit that resistance and pull back, or are we going to break through? And that's been the question, is like what you were saying, right. There's so many reasons why we should not break through, right. And yet we just keep moving higher.
Well, price leads everything. Price leads economic growth. Price leads, economic data. It leads earnings estimates. It leads almost everything. So, and it really leads, a lot of it's because of a shift in sentiment. And right now, sentiment has been somewhat stable. We're seeing stabilization. When that starts to turn, and that'll be reflected in price, that's the time that all these things likely will come back on the front burner. For now, it seems premature. It looks like this week with big earnings events and really big economic data at the tail of this week with the jobless claims and the payroll report. I mean, that's probably the time, Thursday, Friday, if equities can rally up to that level, it might be time to take some off the table. For now, it looks like the S&P is going to break above April highs, and we probably get up to near 1,600.
All right, well, there you have it. It looks like you've got maybe some smooth sailing until the end of the week. Mark is saying you might want to consider pulling some of those profits off the table. That's Mark Newton from Greywolf, and I'm Deborah Borchardt with The Street.